Okay, good evening. So we are now looking at financial management accounting, and in particular, we'll be able to do the question where we need to prepare the ledger accounts in accounting. This is a primary aspect that you need to know and understand. You prepare, you got the double entry system where we're looking at we debit the receiver and credit the giver. So there's this question too that we are looking at where we need to prepare the ledger account. So a new company called Monze Enterprises Trading Limited was registered with PACRA and started operating on 1/0/2015. The following transactions took place during his first month in business. So on the 1st of January 2015, the capital of 160,000 was paid in cash by the shareholders. Then on 2nd January 2015, the company paid 145,000 of the cash into the business bank account. Okay, so we are looking at this, the primary one, where we are preparing the ledger accounts for the double entry system. So we look at the debit and credit. So debit, under debiting, we have this aspect where we debit, which is DR, we debit the receiver in accounting.
Mr. Collins, I'm not able to say anything.
This hasn't been shared. I'm sure this would have been shared. Are we able to see about the debit on this whiteboard?
Yes.
Yeah. Yes.
So debit the receiver and then credit the giver. So this is about what accounts is all about. So when you're receiving money from someone, your account should be debited because you have received it. If you are giving away, your account should be credited. That is just the accounting concept or accounting treatment that we actually look at.
Just there, sir. You're saying when you are receiving the money, your account should be debited, not credited, since the money is coming into your account.
Okay, you see, banking and accounting, they are totally different things. Okay, in banking, when your account has been credited, it simply means you have received money. But in accounting, it's totally different. So in accounting, when you have received money, if I've received money, like an example, you can have a T account here. This is it, Mulenga. And then you can have Banda. An example here, you can have Mulenga here on this one. So Mulenga's account. So this one is this T account. We have this side is a debit. This side is the credit. Okay. So if this man has received money from Banda, okay, so we have the Banda's account here. Okay, before we even actually get into the details of whatever it is we are doing. So for Banda's account, what goes on here is that we have also a debit on this side, and then the credit on the other end here. So if you have received money from if Mulenga received money from Banda, so you put the date first. If it's the second of March 23, you are supposed to indicate that this money came from Banda. And the amount you indicated 500 kwacha. So is receiving in accounting, you debit the receiver. So this person,
Okay.
yes, so this person who was given away, you will indicate the day also to complete the double entry entry system. So you put 0, 2, 0, 3 and the 23. So you put this money is going to this guy. So you put it's going to Mulenga. Okay, so and then you just say, okay, this is how much? 500 kwacha to complete the double entry. What? Double entry. So this is what happens in accounting. All right. So if we are to go for a question, I think this question has been shared now. You can see it, right? Is anyone else able to see this question?
Yes.
Yes, sir.
Yeah, so this question, let us do it together. This is the only question we are going to do now. Before we get into the detailed composition of financial and management accounting, this is the primary, these are primary questions that we need to do. Okay, so we have this company called Moise Enterprises. Okay, trading, and it was registered with PACRA and starting operating on 1st January 2015. The following transactions took place during his first month in business. So on 1 January 2015, the capital was 160,000, was paid in cash by the shareholders. Then let us just evaluate it before getting down. So the double entry system, all assets, I have to make mention that in accounting, we have assets. Assets, these are items that bring economic benefits to the business. So all assets have a debit balance. Okay. So all assets have a debit balance. Okay. Same as all expenses, because all expenses, they are on the receiving side. So all expenses, such as the paying electricity, they receive. Why do expenses receive? The reason is very simple. It's because you can pay for electricity by cash or by bank or by check. So meaning that we are going to have what we call electricity account. So here, what we call electricity account. And then what account? The bank account. If you are paying by check. So you open electricity account and bank account. So meaning that on this T account, this is a debit and this is a credit on this side. So this is a debit and then this is a credit. So if depending on how you are making this treatment, on whichever one. So if you are paying electricity by bank, so here you would put on this one to say on such a day, you put a day, we say, oh, we paid by coming from the bank, we paid a 200 kwacha. Maybe this is on the first day, okay, 1st January 2023. So the double entry system will be, you will say from the bank, we paid for electricity. So put electricity here, that's where it went to complete the double entry system. Please take note of what I'm explaining now, so that before looking at this question, it will make sense for you, that you need to understand. So it will be a 200 kwacha. Even here, this one will be a 200 kwacha the other side. So you put the date, it's the 1st, okay, 1st January 2023. So this is a double entry system. So all the expenses they receive. Then if you paid again electricity on another date, you put the date here. If it came from cash, you say, okay, now we paid, it came from cash, not a bank. So we bought electricity using a cash, not a check. When it says bank, means it's a check. So if it's a 500 kwacha, you put maybe 300 kwacha here. And then here we're going to put the cash account. So on the cash, we also put a 300 kwacha here. So this is just about what goes on as we are looking at the double entry system. So all liabilities, okay, assets, they bring economic benefits to the business, e.g. a vehicle. As we go in details, we'll be able to explain, I will be able to explain that much. Or assets. So for assets, we have a car is an asset, okay, which is a motor vehicle. We can have plant and the equipment. These are motor vehicles, these are fixed assets. You can have also the fixtures and fittings. So fixtures, so these are our assets that bring economic benefits to the business that we need to actually consider. Then we also have the other aspect where we're talking about liabilities. So liabilities, these are items that take away economic benefits from the business. So for liabilities, we have a number of liabilities. We have payables, which are called trade payables, account payables, or suppliers. These are suppliers. These ones, we are supposed to. So these, they have a credit balance because they supply goods to us on credit. So suppliers, they have a credit balance. So bank overdraft is a liability. Okay, so you have a bank overdraft is a liability, and you should have a credit balance. Okay, so this is just about what this one goes. Okay, so we have also an accruals, the benefits enjoyed, not yet paid for. So accruals, they have a credit balance. So here, these ones, they have a credit balance. Okay, so this is about what accounting is all about. So anything else we'll be able to understand as we go. Okay, so we can now look at the question. So capital, we pump it in business. So capital, also this one has a credit balance because you invest it, you use it, and you put the money in business. So it has a credit balance. Okay, so this is just about what this one goes on. So we can now look at this question. So on the 1st January 2015, we started business with a capital of which we know that this capital was 1,000, was paid in cash. Was paid in cash by the shareholders. So the accounting treatment, we have to understand which one should be debited. All capital liabilities, they have a credit balance. On the 2nd January 2015, the company paid 145,000 of the cash into the business bank account. Then on the 6th January 2015, the company bought a van on credit from Toyota Zambia for 40,000. Then the company rented shop premises for 3,000 per month, and the company paid for 30 months immediately by check, which is the bank. Anything to do with the check, to me, is the bank we're talking about. Then the company purchased the goods on credit from, so these are purchases we bought on credit from Carwell Limited. So these are our suppliers. These are purchases. So purchases were on the receiving side. Okay, so the company purchased goods on credit from Carwell Limited for 44,000 on 10th January 2015. The company paid shop expenses amounting to 1,500 by check on the 10th January 2015. The company sold goods, so these are sales now. These are sales. So this is just about what we need to understand thoroughly. The company sold goods on credit to Chivombo Limited for 80,000 on 11 January 2015. The company received the check from Chivombo. So we received the check from Chivombo. These are our customers. We sold to them. Okay, sold goods on credit to Chivombo. So the company received a check from Chivombo Limited for 70,000. This check was paid immediately into the bank on this date. So we really need to understand as we go what is going on here. So the company sent the check to Carwell. Carwell, these were suppliers because we bought from them. Okay, on credit. Company sent a check to Carwell Limited for 34,000 on the 24th January 2015. Also, the company sent to the Toyota Zambia account by check. We paid these guys, paid these people, there's Toyota Zambia. We paid them based on they purchased a van on credit from Toyota Zambia. These are suppliers. The company purchased the goods costing 50,000 from Carwell Limited on credit on 31st January 2015. And then the last transaction is that on 31st January 2015, the company made cash sales of 60,000. So we are requested to enter the above transactions in appropriate ledger accounts. Of course, also to extract the trial balance. Of course, also to balance of accounts and bring down the balances at that date. So this is our requirement. So we come here and start sorting out. On the capital account, capital should have a credit balance. So what is happening is that the amount we had here, okay, was the amount we started the business with was 160,000. We paid in. So the capital on 1 January 2015, capital of 160,000 was paid in cash by the shareholders. So what is happening is we have the double entry system here, which is we have to open a cash account. So from here, we are going to credit the capital. So we have the capital. And then we also have, so we have the capital account. So the capital account is coming from cash. So that's why we have this cash of 160,000 here. Okay. So this 160,000 came in as cash. So this is it on a credit, and then this is it on the debit. So there's this amount came from cash. So on the other hand, we have the cash account. So when you get to the cash account, we are supposed to indicate that this is it, the debit, and then this is the credit. To complete the double entry system, we are balancing here to say on the capital account at the credit balance. Okay. On the capital account, that the credit balance of 160,000 that could have gone to the cash account. So the cash account here, we are balancing to say this is 160,000. That marks the first transaction for the first month, okay, of this year. This is 2015, 1 January 2015. This is on January. Then on the second day of January 2015, company paid 145,000 of the cash into the business bank account. So we are removing the money from there, the cash into the bank. So cash, you come to cash and go into the bank. So we have the cash account, which is they received, so the two double entry system that are here, the company paid one of the cash into the business bank account. So 145,000, okay, of the cash into the business bank account. So bank account 145,000 should be there. So it came from the cash account. So this is the debit because the bank is receiving. So this is what's happening. You're supposed to know where the money is coming from, where it's going. So debit the receiver and the credit the giver. So the cash is 140. So from the cash, so going to the bank, this is where the 145. So the primary entry here is on debiting the receiver and credit the giver. This is what happens. So that is it on the second transaction, which we have sorted out. So this one has been sorted out, and this one. Then on the 6th January 2015, the company bought a van on credit from Toyota Zambia. So we bought from these guys, these are suppliers. We bought the van, so the van was on the receiving side. Okay, so we have to open the van account. So the van account needs to be opened from Toyota Zambia. So the van is on the debit side. It came from Toyota Zambia. This is on the credit. So this one was on receiving side. So that's why it received 40,000. Then we go to the Toyota Zambia account. So Toyota Zambia account, we know that we bought a van. Okay, so Toyota Zambia account, we bought a van on which date? On 6th January 2015, we bought a van. So on credit, so this is, they were on giving side. So debit and credit, so they were on the giving side. Then we have the other information here where so this one has been completed on the Toyota Zambia. So this is on this note. The company rented shop premises for 3,000. So shop premises, they rented that amount. Okay, 3,000 per month. And they paid by check. So by check, it's a bank. So meaning that shop premises, it's the rent that we're talking about. So rent was on the receiving side. So rent expense, it came from, so this is on the debit, it's because the rent was on the receiving side. So rent came in because it was by bank. So the accounting entry here, we have to look at the bank. The rent expense should come on the other side. So our rent expense for this comes here. We paid the bank paid rent. So this is, it was losing away on the credit side, money was going. This is the double entry system. Then we come on the, so this one is gone. The company purchased goods on credit from Carway. So purchases was on receiving side, and then the Carway was on the giving side. So Carway is our supplier. So purchases, this is on the debit side, and this is on the credit side. So this is just about the accounting entry or treatment that we are supposed to go for. Then we know to go for the other one. Okay, so this one is gone. The company paid shop expenses amounting to 1,500 by check. So meaning we are talking about two entries, bank and shop expenses. The bank account and shop expenses. So bank account and shop expenses. So shop expenses, the bank was giving away to shop expenses. So that is an treatment, shop expenses. So you come up with accounting the shop expenses account. So shop expense account was on the receiving side, 1,500. Then getting down to the other one where we look at the company, so shop expenses, this one is done. The company sold goods on credit to Chivombo. So Chivombo is our customer. We sold to this customer. So sales account were on the giving side. Chivombo was on the receiving side, 80,000. So Chivombo was on the receiving side. Okay. So Chivombo was on receiving side, 80,000 came from these were sales on credit, of course. So they're getting down to the sales account. Sales account, we sold to Chivombo 80,000 to complete the double entry system. Then we go to the other one. The company received a check from Chivombo for
Collins. Hello?
Yes, please. Okay, you cannot go ahead and ask questions.
All right. Sorry to take you back, but could you kindly explain to me on what you did for the third one? Company bought a van on credit from Toyota Zambia.
So
for 40,000.
So on that one, what is happening is we have to look at which account was receiving. So there are two things here. They bought a van. That van is your asset to work for the business. So that so the van was gaining. So it's a debit. It was we received it. So Toyota Zambia, and we bought actually on credit from them. Those are our suppliers where we buy from. So Toyota Zambia gave away as we received. So a van had to be debited. So the accounting treatment was on that date. Okay, on that date, the van on the 60th of 2015, January, the van, so Toyota Zambia here gave away this van for that much on the credit side. So you go to the van account, the van should have been on the receiving side to here on this date, on the debit side. So this is a treatment. So you just have to look, there's nothing much to worry about. There's just about which one is receiving and which one is giving away. So, like an example, we received the check from Chivombo. So if we receive a check from Chivombo, this check, which means the bank received, so on the debit side, the bank received, then Chivombo gave away 70,000. So that money should be, when you go to a bank account, it should be indicated that we received it from Chivombo in a bank statement. It will be on the debit side. Then when you go to Chivombo's account, you should be credited because the one was just giving away. So Chivombo, 70,000 gave away, but it was going to the bank straight away. So from Chivombo, this money went to the bank. If it was a cash, you would have put a cash here. So this is about the accounting treatment as we look at the accounting. Okay. So this one is done. The company said to the Toyota Zambia account by check. How much? Toyota Zambia, we bought on credit from them. Okay, so we have to go back. We bought on credit from them. We bought a van, but we didn't pay them cash. It was on credit, so we sorted them. But how did we? What was the mode of payment? We used the bank. So this is the reason why the bank should be credited, is because it's giving away to Toyota Zambia 40,000. So for Toyota Zambia, should when we go to Toyota Zambia's account, should have a debit because it received 40,000, meaning that we were not owing them anything at this time because we cleared them that amount of 40,000. Then we come back to so here we have done that. So the company sent a check to Carway. The Carway, we are supposed to know who are these guys. We bought goods on credit from these guys. They were suppliers. We bought goods on credit from them on that date, okay, on 10th January 2015. So the accounting treatment should be that we have to, since we sent a check to them of 34,000. So the bank should give away 34,000, but should go to Carway. So Carway should have a debit balance to complete the double entry system. So Carway should have the debit balance here of 34,000. But we bought from them goods of 44,000 at a time that has indicated here. We bought the goods on credit from Carway, 44,000, that should be indicated. So the date that we bought those goods is very, very important to indicate. All right, so this is about what's going on here. So we sorted out the Toyota Zambia. Carway, of course, also we sent a check to them. The company purchased goods costing 50,000 from Carway on credit again. We bought goods on credit from Carway on the 1st January 2015. So when you go to Carway, the purchases account should receive. Okay, so purchases account should receive goods of 50,000. Okay, from Carway. So Carway, we need to actually credit because we are receiving from Carway 50,000. So there's a 50,000 there. So this is just about how this double entry system operates. All right, so we have to now continue and checking out what's happening. So, okay, the company made cash sales of 60,000. So we have to go for the sales. Cash sales of 60,000. So sales of 60,000. Okay, so we had the cash sales of 60,000, which is this one. So we have to just know that after all the transactions are done, we have to look at the sales, because we give away sales. They have the credit balance because we sell, giving away. So now we sold to Chivombo 80,000. These are our customers, and then the were cash sales of 60,000. So the total balance here is 140,000. So here in accounting, the total debits to equal to total debits should always equal to total credits. So this is it on how the accounting is supposed to be. Total debits should equal to total credits. So here, that's why we are reconciling now that we balance 80,000 plus 60,000 is 140,000, which should be here also. So here we have to know that there is a balance carried down, which is 140,000. It is just, we're trying to just force matters to balance up here. So this one is, it should be a balance brought down because it's the excess of the credits over debits. This side was nothing. There's nothing, totally nothing here. So this is just a balance brought down for the excess of debits. So in short, we have credits of 140,000. For Chivombo, there's a 10,000, 80,000. So this account, we had to balance up. They received, we sold to them, so they received 80,000, but these are our customers. We sold to this Chivombo, but they paid us only 70,000 by bank. Bank received the 70,000. So meaning that the Chivombo is still having a debit of 10,000 for at this time. Okay, that is the balancing figure here. We just balanced it here. We have to look at where the excess should be. The purchases, we can see the total here is 94,000. Balancing figure is 94,000 because the total debits. So the purchases are still showing a balance figure of 94,000. That the purchases amount. Then for rent, we paid by bank 3,000. So to balance up, we have to also put a 3,000 here. So as a balancing figure, we have the balance brought down of the 3,000. Then Toyota Zambia, this account is closed because we actually cleared them. We paid them 40,000 by bank. They received that much by bank because the debit they gave us a van. We paid them by bank, so it's closed. We are not owing them anything. The bank account, we are supposed to actually add what is here. The total is 215, but they paid for rent. We also paid for the shop expenses. We paid for Toyota Zambia. We paid for Kawe. So the balancing figure that was remaining here, we had excess of 136,500 at the bank, which is still a debit, showing that we still have it. In accounting perspective, this a debit simply means you still have that money physically there. This is in accounting perspective. Then capital account, we still have a 160,000 because that capital, it was just in form of cash. It was in form of cash. So the balancing figure is 160,000 that we still have on a capital base. Then we are getting down to the rent. Rent is still there as rent. It is showing, because an expense should have a debit balance. Purchases, it has a debit balance. Purchases, all expenses and assets, they have a debit balance. So balancing all this cash, we had 75,000, which we still have on the debit side on this column. It was still there because the cash is an asset. Sales we are giving away. Always sales should have a credit balance because we are giving away. Chivombo, this was our customer. Customers, they should have a debit balance because you have a debit and a credit. Okay, so this is just about what goes on. Then we are getting down to shop expenses. This one is a debit balance because it's an expense. We have a debit here and a credit. So these ones, they should have a debit balance. Then we have the van is an asset, should have a debit balance. Then the car, well, these ones were suppliers. So these were we bought from them on credit on most times that it has been indicated. So these are suppliers. And then these ones we're supposed to have the balance, which is called the credit balance. Then we have after balancing off, you have balanced off the account. You balanced off the account, so you just have to check where entries are found. If an entry is on a credit, you pick it on a credit. So you prepare the trial balance. The trial balance only checks the accuracy of the double entry system. So here we have actually done entering their transactions. We've balanced off, bringing down the balances at that date. We've balanced off. So we need to extract a trial balance as at now. So a trial balance checks the accuracy of the double entry system. So our trial balance has come. We just have to pick the figures where they are. So for the capital is on the credit. The bank is on a debit 136,500. Then we have also Toyota was closed. Rent is 3,000 on the debit, was an expense. Purchases, we have 94,000 on the debit. Then we have the cash was 25,000. Then we have also the sales. Sales was 140,000, which is on this end here on the sales account. Then we have the Chivombo. These are our customers. So these are called debtors, and they're supposed to have a debit balance from the term debtors. Then creditors, they should have a credit balance. We are suppliers like Kawe. We sold goods to Chivombo. This is our customer or our debtor because we sold on credit. Then we get down to shop expenses, 1,500. It's an expense, should have a debit balance. Then van was 40,000 on the debit, so we're putting them the way they are. Carway was about suppliers, supposed to have the credit balance. Then this is just about the trial balance that was first January 2015. So we have the debit and the credit. Capital was on the credit of 160,000. Cash was 75,000. These are the figures coming from where they're supposed to be. Cash was 75,000 on the debit. We pick them the way they are. And then getting down to, so this is cash. The van was 40,000 on the debit. Bank was 136,500. Sales on the credit side. Chivombo was our data, was on debit side. The 10,000 was for Chivombo was on the debit side. Okay. Then we have also the rent expense is on the debit side, it's an expense. Even this other one is on debit side. Purchases, they are on the debit side. Carbon Limited was our suppliers on the credit side. So after adding all these, the trial balance checks the accuracy of double entry system. So this was reconciling with the figures after adding these values. So this is just about what this question is all about. So after entering the information, posting the entries, the most important thing is that we need to debit the receiver and credit the giver. This is what goes on as we are looking at accounting, preparing the ledger accounts, which is a very, very important thing, because it's from this information that now we prepare other final accounts, the trading profit and loss account, to see how much profit the company made and the expenses incurred during the accounting period to find the net profit. This is just about this question that came. It's about double entry system, debit the receiver and credit the giver. So there's nothing much, there's nothing tough that should be there. Unless there are some questions on this one, please. So if there are no questions, then just a matter of going through this kind of recording. You go through, you check which one was receiving, or anything that is receiving should have a debit balance, and then you balance off where the excess is. If the account has been paid off, then it is closed. Like Toyota is not even appearing in the trial balance because this account was actually closed, it was paid off. And then we have to look at the shop expenses. If it was not paid off, it was paid off. This is just about what goes on as you look at this accounting ledger preparation for the trial balance that checks the accuracy of the double entry system to find out whatever entries we are doing, if these entries were okay. So this is how this question is all about. So it's just a matter of going through and understanding capital and all liabilities of a credit balance, because the capital you pump in as in cash, so it was paid in cash by the shareholders. So you removed the capital and you paid that capital into the cash account. So the cash was on the receiving side, and then capital was on the giving side. So this is why the cash account had that debit balance. So we can end the class for now. Unless there are questions, we can end the class for now. Just a matter of going through the recordings on the debit and credit side of whatever entries we are doing.
Thank you.
Okay.
Sorry, I've got clarification. Did I hear you correctly when you said that if an account balances, it should not appear in the trial balance?
What
Like
I'm saying?
for the example of Toyota.
I need to answer this question.
I'm saying, did I hear you correctly when you said that when an account balances, it doesn't appear in the trial balance, such as Toyota?
Okay. What I was trying to explain here is that if the account has been paid, like Toyota Zambia was paid completely because we bought from them on credit and we sorted them out exactly by check. So for this reason, they should not appear in the trial balance because this account was cleared. We cleared them, we paid them the 40,000. So we're not owing them anything. So they shouldn't appear in our books anymore. So anything else, unless whatever appears in the trial balance are items that are still pending, that are still have a balance that we need to sort out, like Cabo Limited, we're still owing them 60,000 because we bought from them. So we're still owing them 60,000, which is this amount. So that's why it's appearing. But for Toyota Zambia, we paid them the amount that we got from them. We settled them all the money by check, by bank. Which means by check, it means by bank. Okay, so Toyota's account was set. So the company settled Toyota Zambia account by check on this one. So how much we are owing them, we paid them all that amount in full. So this is the reason why it's not appearing there. So I hope I answered your question.
Yes, you have. Thank you.
Okay.
Collins, I wanted to find out when the recording will be posted on the group.
Yes, the recording will be posted on the group.